Most traders stare at the gold chart, trying to guess what happens next. I don't guess. I look at the dollar index and I see the future of gold before it happens. Watch these two charts. Dollar on left, gold on the right. See what happens. The dollar moved first. Gold followed. That's not a coincidence. That's a cheat code. The simplest gold trading strategy I know, and it's about to become yours. I'll give you the exact entry rules, the setup, and the one trap that ruins this system if you ignore it. Let's start with why this edge even exists. Watch this. Dollar index breaks below this support level right here. I flip to gold immediately and wait for a small dip back and enter there. Easy 50 pips. Same setup, different day. Dollar index breaks above resistance. I flip to gold market and enter short. Another winner. This keeps happening over and over, and most traders never see it coming. Here's the part nobody talks about. Gold is priced in dollars, so when the dollar gets stronger, gold becomes more expensive for the rest of the world. They stop buying, so gold drops. Flip it around. Dollar weakens, so gold gets cheaper. Everyone piles in, and gold rises. Simple once you see it, invisible if you don't. Remember this, the dollar moves first. Not always, but often enough to matter. If you're only watching gold, you're waiting for gold to move. You're reacting. If you're watching dollar index, you see the move coming. You're anticipating. That's a completely different game. Here's my gold trading strategy in one sentence. When the dollar index breaks down, I buy gold. When dollar index breaks up, I sell gold. That's it. Everything else is execution. Let me show you exactly how I set my charts up. Most traders make their gold charts way too complicated. Indicators stacked on indicators, trend lines everywhere, Fibonacci levels all over the place. They can't even see the trade anymore. Here's what my chart looks like. Clean, simple, and obvious. First, I open dollar index. This is the only chart I care about. I keep it on the 1 hour or the 30 minutes chart. Sometimes the 4 hour if I want to zoom out. Anything lower is just noise. Anything higher is too slow. Now I mark two things, support and resistance. Levels where dollar index bounced and got rejected before. This is where I draw my horizontal lines. If a child could spot the level, it's valid. If you have to squint and guess, skip it. That's the entire setup. No indicators, just clean levels where price reacted before. Support below current price, resistance above. Done. Now we wait for one of these levels to break. When it does, we flip to gold and execute. At this point, you already know more than most traders staring at gold charts all day. You know what chart to watch. You know what to wait for. Now, let me show you exactly what happens when that level breaks. Here's the situation. Dollar index is sitting above support. We're watching, waiting. Then it happens. A candle closes below that support level. Not a wick below, a close below. That's the difference between a fake and a break. The dollar just showed weakness, so gold is about to show strength. Now watch what I do. I flip to gold market. I already know gold is about to break up, but I don't buy immediately. That's chasing. If you chase the initial spike, you're buying at the worst price. The pullback happens, and you're already underwater. The pullback is the trade. So I wait. Price spikes up on gold. That's the initial reaction. Then it always pulls back. Comes down to test a level. Maybe previous resistance becoming support. Maybe the breakout level itself. This is where I want to enter. I look for a rejection candle on that pullback. A wick or an engulfing pattern. Something that shows buyers are stepping in. That's my long entry. Stop loss goes below the pullback low. Tight but logical, usually 15 to 30 pips on gold. Enough room to breathe. Target is the next resistance level on gold. Now let's flip it. Shorts are the same system, with one difference: speed. Gold drops faster than it rises, so that bounce window is tiny. If you hesitate, you miss it. So when dollar index breaks above resistance, I flip to gold. I wait for the bounce and enter on rejection. Same system, faster trigger. Now let me prove this works. Now theory is useless without proof. Let me show you this working in real time. Look at dollar index here. See this support level? Price tested it several times. Now watch. This candle closes below. Clean break. So dollar weakness confirmed. Now see how gold is just starting to move. It hasn't taken off yet, so I wait for the pullback. There it is. Gold pulls back to this previous resistance level. Now it's acting as support. That's my entry. Stop below this candle. Target at that next resistance. Different day. Look at dollar index again. This resistance level. Price rejected here twice. Now this candle closes above. Dollar strength confirmed. And look at this. Gold hasn't dropped yet. It's still sitting near the highs. I have time to short it, but first I wait for the bounce. Right here, gold bounces up into this previous support level. Now it's resistance. This candle is my trigger. Red body, sellers rejected the bounce. That's my short entry. Stop above the candle. Target at next support. That's the dollar flip in action. Now let me show you the timing advantage. This is the part that changed how I trade. So the dollar breaks this level right here. You see it immediately. Now flip to gold. Look at this. Gold is flat. Hasn't moved an inch. Most traders, they are staring at gold right now, seeing nothing. They have no idea what's coming. But you do. You saw the dollar break. You know the explosion is coming. You are positioning yourself for a move that hasn't even started on the gold chart yet. And you enter. Now look at gold a few candles later. See that? That's when the move really starts. That's when everyone else finally notices something is happening. But you entered here. They're noticing here. You're already in profit while they're still deciding what to do. That's your edge. You see the move before they do. You enter early. You're cashing out while they're still clicking buy. This pattern keeps repeating. Dollar index breaks. Gold follows. Now you see it before everyone else. But before you trade this, there's something I need to warn you about. Miss this, and you'll give back every pip you just made. This gold trading strategy works 70% of the time. The other 30%, it's a trap. 3 situations where I stay out completely. First, major news events. Fed interest rate decisions, CPI releases, jobs reports. These create chaos. Dollar index spikes one way, then reverses. Gold does the same. And the correlation breaks down temporarily. I don't trade 30 minutes before or after major news. No setup is worth getting destroyed by a Fed surprise. Second, weak dollar index breaks. This is the trap I warned you about at the start of the video. Not all breaks are equal. Small candle barely closing past the level. That's low conviction. Gold might not follow. I want strong breaks with big candles. Clear closes beyond the level. This is where most traders get trapped. They see any break and they rush to gold. Then the break fails, gold reverses, and they're stuck. So wait for strong breaks at obvious levels. Third, when gold trades at a major level. Sometimes dollar index breaks, but gold is sitting right at a major round number, like $4,000. These levels have their own gravity. Gold might respect its own level more than it follows dollar index. Before I enter, I check where gold is sitting. If it's right at a major psychological level, I'm more careful. I wait for extra confirmation. So 3 filters: major news, weak breaks, and gold at major levels. If any of these are present, I skip the trade. Plenty more setups coming. While everyone else stares at gold, waiting for something to happen, you're reading the dollar. You see the move before it starts. You enter early. You're already in profit while they're still deciding what to do. That's not a small edge. That's a completely different game. The gold strategy is yours now, but the difference between a good entry and a perfect entry, that comes down to reading the candle itself. I break that down in the next video. And if you're ready to fit this into a full A to Z trading system, that's what our academy is for. Link is in the description.